Tony, can I just ask, are we changing this for a particular reason, the time, or did you think it was a better time, or you're not available at 4 o'clock on Wednesdays anymore?
Yeah, I'm not available. My days are getting too busy. I'd have to move it to the evening. You know, a lot of people, you know, seem to think it wasn't too much of a problem. Some people can't make it because they're still at work 4 o'clock. So yeah, basically I had to move it. So I'm going to play this video. This is an interview with Michelle McCrory from Kitco News, and she's interviewing the head guy of Chainlink, and they were recently at a crypto conference called Consensus. It's a very big one. It's put on by the Consensus group, the Ethereum people, and they're talking about how the future world, how everything's going to be tokenized, and that yeah, and a few other things which I can sort of disseminate after the video. So it's about just over 20 minutes. So I'll just set that up now.
Investor get exposure to the upside of this? Like, what's the play here?
I think generally speaking, Bitcoin is a good index for the whole crypto industry, and generally that's consistently continued to be the case.
But for the tokenization industry, is it ETH? Is it Ethereum? Like, how do you play this trade for?
I think they should have an interest in the real world assets themselves and think about adopting those real world assets, like tokenized gold, tokenized fractional ownership of real estate, tokenized carbon credits. That's the direction I would think about. In terms of all the different technologies, I would kind of just look at the technology that's going to become indispensable to allowing all of this to operate. Generally, my experience and my reading of the history of technology is that the technologies that are critical for transactions to happen, for systems to move ahead, are the technologies that when those transactions increase, people are in a way forced to adopt those technologies.
Welcome, digital asset fans. I have a special video in store for all the utility coins talked about on this channel.
I'll just skip through this, but he's just basically introducing this video as well. So we don't really need this bit. So I'll just skip back to the interview.
You from Boston for Consensus 2024, one of the world's leading crypto, blockchain, and Web3 events. Many of the industry leaders have gathered here today, including Sergey Nazarov, the co-founder of Chainlink, who says eventually all transactions will be on the blockchain, and that being on the blockchain will be as important and as prevalent as being on the internet. Sergey, great to have you with us.
Great to be here. Thank you for having me.
Well, Sergey, we've got a lot of topics to discuss, big focus on tokenization, as well as your outlook for ETH and Bitcoin, with the recent approval of the ETH spot ETF. But before we get into that, for our viewers that are not that familiar with Chainlink, give us a brief intro and a breakdown.
So Chainlink is infrastructure that allows smart contracts to operate and do advanced kind of operations. It's also a set of protocols that allow the blockchain industry to function across chains and in relation to data. So in the internet, you have protocols like HTTPS, which serves websites like YouTube or whatever. And you have TCP/IP, over which information moves across the internet. Chainlink is a similar set of protocols and standards for how the blockchain industry works with data and connectivity across chains. And this is important because without that infrastructure, you wouldn't have the internet. And without Chainlink, you wouldn't have the growth of something called DeFi. And you wouldn't have a secure way to connect across multiple chains to form what we call the Internet of Contracts. So Chainlink is sometimes a little bit difficult to understand because it's a low-level infrastructure technology. It's kind of like the pipes of what makes a lot of advanced blockchain and applications work. It's kind of below the surface.
Right.
And similarly, in the internet, there's many technologies below the surface that power the internet. HTTPS, SSL, TCP/IP. That's the kind of technology that Chainlink is.
And you have really revolutionized the way smart contracts work with real world assets and real world data. Explain basically what that is for our viewers, the smart contract idea.
So a smart contract is a technical agent that both parties can rely on without any trust assumptions. So when you and me do a transaction, we have trust assumptions that I will honor the transaction or that you will honor the transaction. Or if I'm a big institution and you're a big institution, we still have assumptions that we won't renege on our agreement to fulfill kind of a delivery versus payment. You buy something from me, I send it to you. Smart contracts are basically on-chain code where you can encode the conditions of our agreement.
Right.
And neither you nor me can affect those conditions. So we can have a smart contract that says, if it doesn't rain, then the crop insurance gets paid to me. And if it does rain, it doesn't get paid to me and you get my premium. But you, as an insurance company, would no longer have the ability to decide not to pay me,
Right.
even if it didn't rain, because the system that is executing that agreement is outside of your control. In a traditional insurance company, that system is completely within your control. So even if it doesn't rain, you as the insurance company could choose not to pay me. Then we'd have to go through a lengthy legal process. So smart contracts are basically these technical agents that operate in this infrastructure called blockchains and Oracle networks. And that's the infrastructure that we kind of work on.
Right. Eliminating the trust factor, condition is met, A triggers B. There's no room for confusion there. Just to get that basic background for our viewers, let's now focus on what you were talking about at Consensus here. And the crux of your presentation was around tokenization, saying that all transactions will eventually be on the blockchain and that we're in fact at a tipping point where all of the world's biggest institutions are starting to look at how they're going to put their value on chain. Echoing sentiments that we heard from Larry Fink, the CEO of BlackRock, the world's largest asset manager. Earlier this year, he said that we believe the next step forward will be the tokenization of financial assets. And that means every stock, every bond will have its own CUSIP. It'll be one general ledger. Every investor will have their own number. We would have instantaneous settlement. Now, obviously, this is going to be a huge step in revolutionizing traditional finance with blockchain, with crypto. Again, as a background, explain what tokenization is before we get into why this is so momentous.
Sure. So tokenization is taking the ownership rights to something like a gold bar, a piece of real estate, an equity, a commodity, really anything, and putting that ownership right into a blockchain in the smart contract we just discussed. Bitcoin is an example of an ownership right for the synthetic instrument called Bitcoin. Real world assets are an ownership right for real world things, real estate, commodities, equities, gold, and so on. And the transition that Mr. Fink describes is the one where the use of tokenization will no longer be limited to, we make a token about, table coin, and table coin is worth whatever you and me are willing to pay for it in the open market. That's how tokenization has been used so far. That is not really a financial product, and that's not participating in something called securitization, which is basically taking something real in the real world and turning it into a financial product. The real world asset trend is the next stage. The first stage of tokenization was literally millions of cryptocurrencies, most of which have no value. The next step of tokenization is applying that same technology, but to real world assets.
So you, again, like Larry Fink, have said that all credit, all commodities, all derivatives are going to be on chain. Why? Why do we need this? Why is this better than the system we currently have?
Sure. So there's kind of two fundamental reasons. The first fundamental reason is efficiency. For example, something called atomic settlement, or T+0 or T0. So the US is going to T+1, which means it takes a certain amount of time for transactions to settle. When transactions take time to settle, like 1, 2, or 3 days, if it's a $100 billion transaction, we can't gain interest on that money. So I'm stuck in some transactional system where for a few days I don't get interest on the $100 billion that I paid for something. And even a few days of 4.5%, 5.5% interest on $100 billion is a lot of money. That's a very basic example. That's an example around payments and partly collateral management. So the first thing is that people like Larry Fink are mired in all kinds of legacy problems that cost them literally hundreds of millions of dollars about how to rebalance their portfolios, about how to buy and sell assets, about how to receive payment, about how to prove things to people like the NAV, the valuation of the fund. These are esoteric middle office and back office problems, which the average person has no interest in because it's not their job, it's not their problem. But these problems are worth hundreds of billions in fees and complexity and risk. And that's one of the reasons people like him are so excited, because if you're, a craftsman doing something and you had one tool and someone gave you a much better tool, you're excited about that. So that's one level of kind of why it's very important. And that's one of the big driving reasons why the DTCC, Clearstream, Euroclear, basically the three biggest clearing and settlement systems in the world are now actively talking about transitioning to this model. The other side of it is market demand, right? So the ability to tokenize things has two really great properties to it. The first one is if you tokenize traditional assets, money market funds, treasuries, you basically put them on chain, and then there's a market that wants to get them on chain because they can use them as collateral. So they can use them to back things on chain. And this is what people in the on-chain world have been doing or trying to do for many years. They've been trying to create baskets of assets that are controlled in a private key-based way. So traditional financial instruments are more attractive on chain because people want to own them on chain in a direct way where they control the asset, just like they control a Bitcoin. Then there is net new assets. Net new assets are like tokenizing real estate for fractional ownership of a multi-$100 million building. Tokenizing private equity funds, where you would have had to have 5 million to get in, now it can be at 10,000. Tokenizing carbon credits, tokenizing municipal bonds, tokenizing even gold, that you can then go and redeem that gold in person against a cryptographically guaranteed token that you control, right? So then there's this whole category of net new assets that are not currently in the financial system, but once you tokenize them, tokenization is just a better, more efficient way to put them in the financial system.
Right. So digital representation of ownership of an asset on chain, on the blockchain. And how big do you anticipate this market to be?
Hundreds of trillions. Just take every market. Take the gold market, the real estate market, the debt market, the derivatives market, the securities lending market, all of these, all assets. What's fundamentally happening is you have a new format for assets, for ownership, and also for the data associated with that ownership. And the data is now appended to it in a way that proves things to you about the underlying assets. So the last time there was this type of transition was in like the 60s and the 70s, where people transitioned from paper to basically databases.
Right.
That was the last time that value, all the world's value, used to be on paper. And then databases appeared and computer systems appeared, and the efficiencies and the benefits of computer systems and databases, even before the internet, right, in the 60s and 70s and 80s, were so vast and so great that all the world's value transitioned from paper into a database record. All the world's value. It wasn't some of the world's value. You don't have any piece of value right now that you own, other than whatever you have in your house somewhere, that isn't in a database. But in the 60s and 70s, all of that value would have been in paper certificates or even other paper ledgers. So it's that type of transition where now we're going from databases, which you and me can't trust, right? So one of the fundamental differences is that you feel you have money in Silicon Valley Bank. And if you talk to people about their account in Silicon Valley Bank, they're in the Valley, they're genius, tech entrepreneurs. The US financial system is wonderful. 2 weeks before Silicon Valley Bank's collapse, it's like you ask them, what degree of ownership and real control do you have over this asset that you have in this database? They will say complete control in Silicon Valley Bank. 2 weeks after Silicon Valley Bank, you ask them, what's your relationship with this asset? It's a great question. We don't know what our relationship is with this asset. But your relationship with a private key that you control, and that private key's mathematically guaranteed control over an asset is very different.
So does it bring ownership back to the individual in a more concrete way?
Yes.
Because there have been some concerns about tokenizing everything and it infringing on privacy. It's infringing on decentralization in a way, it infringing on autonomy. I see you're laughing at that. Why is that comical? Why should people not be concerned about this trend of tokenization?
Because the amount of centralization and control other people have over everything they own, and more importantly, the underlying value of everything they own is extremely high. I would say it's currently, yeah. So people are like, I have a brokerage account and I have a bank account. That's great. I control all this stuff. Yeah. Let's take a look at countries that have bank default scenarios where they institute capital controls, like Greece, where you couldn't get more than $65 a day, whether you were an individual or a business. And then take a look at the Bitcoin wallet registration numbers from that time period in Greece. And also take a look at the wallet registration numbers in what people thought were going to be the next economies to fail, like Spain. So those wallet registration numbers go up like hundreds to thousands of percent because people realize that their relationship with their assets is a fiction. And it's a fiction that benefits people with a brand that have over 100 years with their brand. And their logic is, I have the legal system protecting you. I could theoretically deny you access to your assets like Silicon Valley Bank did, but I won't, because why would I? And then the situation changes, like in Greece, and capital controls are implemented, or the situation changes and the solvency of the bank is in question because Moody's decides to do their job and clarify something, even to a very small degree. And all of a sudden, you can't access your life savings, right? So I think what has happened at this point is that brands and institutions are unbelievably expert at assuring everybody that they are safe and that it is safe to put your value and your assets in the system. What blockchains do, really, another way to look at it is it creates what we call the verifiable web, and that has 3 properties. The first property is that you can verify everything going on in the system. Well, actually, no. The first property is you can verify how the system works before you join it. Then you can verify what's going on in the system at any one moment in time. So imagine if you knew every single piece of information that the CEO of your bank knew. Like you had access to exactly the same information. There was no delay between the solvency information of your bank and what you knew and what the CEO of the bank knew. So nothing could be hidden from you. That's the second property. And then the third property is that you can always choose to leave the system under the conditions you initially verified, right? And this is where private keys come in. So this is the new world we're kind of shifting towards.
So Sergey, in a way, it takes some power and control away from the big players, from the institutions, and brings it back to the individual.
Yes.
So why are the big institutions pushing for this? It seems like it could be counter to their interests.
It's inevitable. And if they don't participate, they will lose usership. So these are very smart people. Like the wages that people in banks and asset management get are on the high end of all wages. This attracts people for very, very smart. They're not dumb people. I interact with them on a daily basis. They're very clever, smart people. It's not like there's this huge monumental structural shift in how all value is managed and secured and transacted. And they're just going to sit and the numbers won't go from less than 100 billion to over 2.5 trillion in the crypto industry. And they're just going to ignore it. This is just an inevitable reality because of the benefits of this technology. It's like right now, the internet is obvious to everybody, right? It's obvious that we communicate over the internet. We do Zoom calls, we send emails. 60s and 70s, you ask people about the internet, they're like, why would I need that? But the benefits are obvious now, right?
So if you can't beat them, join them, and this is the trend that it's going. Okay, so you brought up the example of the internet, and you brought up the example of, I guess, paper records, right? And there's always a winner and a loser in any major transformation, in any major evolution. Who are the losers? Who's going to be disadvantaged in terms of providers, in terms of institutions? Who are the players that are going to be on the other side of this when the tokenization trend really takes off?
Right, the tokenization trend and the DeFi trend in the private chains of the banks.
Right, like you had, like your publishers, right? We still have some print stuff. Listen, I'm old school. I like my hard copy, right? But obviously you had a lot of publishing businesses, just to put it on a very rudimentary level, that got taken out of business, that lost out on this. Who are the losers as this trend really takes off?
Yeah, so there's two groups. The first group is anything that can be packaged into a smart contract that some service or system charges a lot of money for. So if your financial service is doing some automated function that you do in your database and servers, and then you charge 0.5% or 0.25% in fees for that, and that can now be written in this technical agent, and this technical agent is so reliable that the chance of its failure is less than your system. And so nobody, using your system is both more costly and more risky than this technical agent that's doing some calculation or some transfer or something. And there are parts of the financial services infrastructure that fall into that. And there are other parts that people think fall into that, but actually don't fall into that. And this is where a lot of people are confused about who will be displaced, and that there will be, everyone will be displaced. Everyone will not be displaced. There will be parts of people's financial services infrastructure offerings that are replaced by smart contracts. And there will be parts of what they do that will actually become more valuable in certain ways.
How would a retail investor get exposure to the upside of this? What's the play here?
I think generally speaking, Bitcoin is a good index for the whole crypto industry. And generally that's consistently continued to be the case.
But for the tokenization industry, is it ETH? Is it Ethereum? How do you play this trade, to put it that way?
I think that's very hard for me to say. I'm not exactly sure how people would approach that. I think they should have an interest in the real world assets themselves and think about adopting those real world assets, like tokenized gold, tokenized fractional ownership of real estate, tokenized carbon credits. That's the direction I would think about. In terms of all the different technologies, I would kind of just look at the technology that's going to become indispensable to allowing all of this to operate. Generally, my experience and my reading of the history of technology is that the technologies that are critical for transactions to happen, for systems to move ahead, are the technologies that when those transactions increase, people are in a way forced to adopt those technologies because they have to adopt them in order to transact.
Right.
Right. So that's the presentation. Just get rid of that. So yeah, I thought he did a really good job of explaining that, and I thought Michelle asked some really good questions as well. So basically, he's saying that everything is going onto the blockchain, just as pretty much everything is on the internet today. And at the beginning of the internet, that all seemed a bit weird. Why do we want to have a website? Why should we be online? All that. The same thing is happening now with blockchain and crypto. And the fact is that it's still very early, and it's still very full of scams and things. But that that is about to be cleaned up big time in the next year or so. In another interview, in the interview that he, in the, sorry, the presentation he gave, excuse me, at his presentation at that consensus, he said also that things are really changing on the tokenizing front this year. That there's a lot of building and developing going on, but he said that next year is when it really starts to explode out into the awareness of people. So I thought that was an interesting timeline as well. But it's all really going to kick off later this year. That's what he said, and that's in line with what quite a few other people, quite influential people in other projects have said as well. The question that Michelle asked at the end there about what should retail investors be interested in around this tokenization of real world assets. He said, invest in the tokens and basically invest in the projects that are doing the real world asset, that they're doing the tokenization, and you might want to adopt some of their, like you might want to use a tokenized gold, they're starting to spring up now, like tokenized gold card, and you can store your crypto, your gold on their, blockchain tracked system, and you can withdraw and spend and all that. And he also said to invest in those infrastructure, basically in the infrastructure companies that are building the, he didn't say his own token, Chainlink, but he's referring to that. They are going to become an indispensable aspect of this new blockchain internet. And so investing in, as I say, they're doing the piping, they're doing the plumbing of this new system that we don't see. You don't see your plumbing pipes under your floor, but that's what he's doing. They are creating the connection between all the different blockchains and the old world and the new world as well. Another thing that he has mentioned, not in that question, not in that interview, but also at his consensus presentation, he said that the world is moving to an entirely unified ledger, and the ledger is a reference to everything being interconnected onto blockchains, and that's what he said. And in that fits in with another video that I saw today, where this lady who is in charge of a company called MTech are building. They have a contract from through IBM. I think they are a connection to IBM. I think. Anyway, they're a private company that are building CBDC pilots for various countries. And she also said that what she sees happening is that CBDCs will be connected to DeFi. They'll be connected to decentralized finance. And basically the interviewer asked her, well, why is that? And she said, because they're going to need it because of the liquidity, because a lot of people, a lot of institutions, a lot of big money men, and also most of us want to be in the decentralized space. And it's simply the technology is just better all round. And so if the CBDCs don't connect up to that, then they will die. They will completely die. To stay relevant, they'll have to connect. That means that payments could be sent via CBDC to DeFi and back. And you'll be able to say, buy a decentralized finance, say you can buy tokens on Chainlink using your CBDC, and and if you wanted to, you could cash out from your tokens into a CBDC. And the information I have is that tokens like XRP and XLM will be the bridge in the center of that. They'll also be doing the decentralized exchanging of like a CBDC to a say a decentralized finance token, and vice versa as well. So this is going to be a whole new system that's all going to be connected up on the blockchain. And I think what we'll see is you'll see other outlier projects, you'll see other decentralized projects that may end up trying to create something on their own outside of that. I think they will struggle, but if they've got a great idea, who knows, they might get do well. So we have to see how it's all going to look. We're just hypothesizing at this stage. We're just sort of visualizing, but just piecing it all together. This whole blockchain crypto thing is going to be a massive over the next 5 years. The growth that is going there is going to completely consume everything. Like he says, everything, hundreds of trillions, he said, hundreds of trillions of value is going onto the blockchain over the next few years. So we have a great opportunity there to be near in the first of the queue. And I think, if we ever had a chance to invest in some of the big companies today, I mean, most people would do it. And but this way we can invest based on what we align with. We can invest in a more safe environment, and the technology is in charge. The humans are not going to have the same centralized control that they've got now. Their technology, the smart contracts, like you said, the smart contracts, once they're deployed, once they're verified, no one can renege on a contract. They can't. They when the conditions are met, people that need to be paid get paid, and the people that have to pay, and you can't stop it. So I think things like that's going to eliminate a lot of fraud and a lot of people when they pull out of deals, or when rogue companies decide they're not going to pay. It's happening all the time. The corruption goes right through the whole system. So so basically that. And the other key thing he said is, I thought really stood out, is we're at a tipping point now. We've reached the tipping point, and that tipping point is the adoption. It's simply the amount of awareness around blockchain has now reached the point where it's everyone's jumping in, and also the technology itself has reached a tipping point where it can no longer be ignored. And this is where people have got to realize that even central banks are having to fall in line. They're not driving this. A lot of them are only figuring out how the technology works now. Banks, central banks, governments, a lot of them have no idea how this works. People think that there's, all these people are fully in control of this, and they've created it and they're driving it. They're largely not. The whole tune from the Bank of International Settlements, the IMF, all the stuff that I've heard from them over the years of listening to crypto, at the beginning they were talking tough about how they're going to track us and trace us, and they've got to eliminate our fraud. Now the whole tune has changed. I've noticed it really a lot just in the last few months. They're now talking about, well, we've got to work with decentralized finance. We've got to, they've softened their tone because the development of this technology is getting away from them. And so they're having to follow the leader. In this case, the leader is the technology, and they're having to play catch up. And I think the CBDC is going to end up being a toothless tiger. It's going to be a nothing burger. CBDC will become a much more watered down sort of money that will be much sort of like a stable coin. A lot of it will go to the unemployed, beneficiaries, elderly, people who can't work for some reason. There will be a handout there that will eventually become a universal basic income of some kind. That's my view at this point. It might change slightly, but I can see the whole fear and worry around CBDC now is, to me, it's really just lessened greatly. And so that's sort of that's sort of what I think anyway. I mean, other people might have a different view. That's fine. I would rather be on the right side of positivity rather than be right in my negativity and get exactly my worst fears. I'd much rather, create from a positive space rather than be reactive on a negative. Yeah, so the world is about to go through a massive transformation. This is going to be huge. I mean, it's for those who are not in this space, they're gonna wonder what the heck has hit them. And I think 2025 is when that really ramps up. And I think 2025 is sort of the year I'm getting the feeling is that's when the banks are really going to start to falter, because they're able to extend it longer than we thought. Because now that I've found out they're all colluding together, they're sharing their balance sheets, they're all helping each other out where they need it to stop the rot from spreading. And I think because they know if any bigger bank, any big bank, any one of the cabal banks went down right now, like how Lehman Brothers did in 2008, 2009, whenever it was, it would be curtains for them. The viral nature of this world would put the sword to their system pretty quickly if a big bank, a really systemically important bank, went. So I think they are racing around. You can imagine them like on a ship entering into a storm, and they're racing around, tying down all the covers and locking everything down on the deck before they are ready to basically flip the switch into a whole new way of operating. So we've got a lot of interesting times ahead of us, I think, and that's why I'm so glad that I'm actually got an early look at this, so that when things start really happening, I can position myself accordingly to just we're going to sort of get a bit of an insight into what's coming, and it takes a lot of the fear away. It does for me anyway. I mean, I don't know about other people. But look, what I'll do is suggest to anyone who's on the call, I mean, if you want, you can ask a question. There should be some fairly big questions out of that, I would have thought, because what he said was pretty huge. So, yeah, if you want to unmute and ask, or other than that, if not, we'll just have an earlier night.
Tony, I'm just interested, I might show my ignorance here, but CBDC, is that mixed up with Nasara Dasara?
CBDC, I have no idea. I have no idea at all. Nasara Jasara is such an infiltrated narrative that I don't trust anything that I hear about that. I read a lot about it, and I have done for many, many years. And I think Nasara started off as a genuine movement that has now become, like, I think a lot of people, that's their exit strategy. They're relying on Nasara to basically save their ass from the impending doom that they see. But in saying that, I think that there will be certain points within the Nasara list are very good. I mean, I fully support if we could have a world with all the points that I've seen. It would be amazing, you know, the flat tax and no income tax and debt forgiveness and free energy and, you know, all this money that's locked up in trusts and all this. But honestly, I think some of it is pure fantasy. But as far as a CBDC goes, like I say, it could become a very benign thing, and that could be used as a way to distribute funds to people who really need it, which kind of has a Nasara ring to it. But we don't know. I mean, no one knows, except what we can do is the more the people that participate in decentralization and decentralized finance and crypto, I believe we are the closest to see how some of these Nasara talking points could roll out, for sure, because the blockchain and has such amazing properties for privacy and censorship resistance and ownership and all of that, and the whole concept of quantum financial system, which isn't quantum computers. People think that's quantum computers and we're going to get a quantum type account. I actually believe that's just the blockchain. But there may be a connection there with Starlink. No, that's a quantum kind of way of transmitting the Wi-Fi or whatever, the connection that we'll need. But quantum computers as a system is still decades away. That's my opinion. And some of these people have got some pretty fanciful ideas about, you know, how this is going to operate. But the thing is, Nasara and QFS, I mean, they're just a word, they're just some letters, but people make it mean to them whatever they want to make it mean. And
So,
who knows?
okay. So it's definitely nothing to do with CBDC. I've got that completely mixed up.
I don't know, Katie. I don't know.
Okay.
No one knows. They're not going to tell us, are they?
I don't know. What?
No,
Okay.
well, they're not. I can tell you now, well, they're not going to tell us anything until it comes out. What I said was that there may be a relation between CBDC and a universal basic income. And that's possible. And that universal basic income, who knows? It could be coming from our so-called Saskatchewan,
Yes, please.
it's called.
C-suite.
Whatever. Yeah, that. But I don't know. I can't say.
No, okay.
Hmm.
Thank you.
Hi, Tony.
Hi, Namaha. How are you?
I'll chime in. Yeah, that, now that you mentioned Starlink, I don't know if you know that Elon Musk was in Bali, and all of Indonesia's going to be taking Starlink on. Yeah, so I wanted to ask: is Australia and Indonesia, New Zealand in the same boat there? Like, do you have Starlink there? Because it's kind of
Yep.
not that familiar with it yet. And the second question is, I'll just finish my questions first. The second question is, the way you described Link, it sounds like it's competitor Quant? Is it the same kind of like the connecting the different, like, yeah, doing the plumbing, connecting all the different blockchains together?
Yeah, yep. So first question, yeah, Starlink is definitely here in New Zealand and Australia, and I know people who use it, and they seem to like it. They said it was a lot better than the internet they had before, although sometimes it does sort of, you do fade in and out. But yeah, it is being offered here. It's about $80, you know, plus you've got to pay a few $100s to get it set up. So it's not super cheap. But I guess there's a lot of rural areas here that struggle to get good internet, so it's better for them. And yeah, Quant and Chainlink I see as quite similar, actually. Quant is basically doing the interledger protocol, that's their ILP, and they are working in an aspect of the well, they're using the API system, application programming interface, and they are definitely connecting up parts of the old legacy system with the new blockchain system. And but I see Chainlink is working, they're working on an even bigger, more macro level, the way I see it. They have brought out this protocol called CCIP, which is cross-chain interledger protocol. So I think Quant is working on one sort of subset of the ecosystem, but I see Chainlink as operating on a higher level, on a bigger level, of which Quant is a part. Yeah. There are other tokens that are also doing the same or similar work. Cosmos is a bit like that as well. There's another one called Pyth, Pyth, that's also working in a similar way to Chainlink. So yeah, a lot of people are very confident and very bullish on those. Cosmos seems to have waned a bit, I have to say. I used to be a very avid supporter of Cosmos, but I've kind of gone off it. I really feel Chainlink, I think Quant is going to be big because that's working with the ISO. That's working particularly with the payments section of the our world, global payments, and they're working with the ISOs, like we know. And the ISO is an API system in itself. But I think Quant is really at the center of that because they're linking all the other tokens and all these other ledgers together. And some other tokens as well that are very instrumental in tokenization is XRP, of course. They're going to be big in tokenization. XLM as well, and XDC. XDC is also, man, some of the stuff I've seen about them lately is huge. And so all these guys are all working together to link all their respective blockchains together. And that's why they need people like Quant and Chainlink. I hope that answers your question.
Yeah, no, that's good. So they're not like against each other. It's not like they're not competitors. They're actually cooperating. They're working together. So that's
They
what I
are.
understood. So
They
it's
are.
great. Yeah.
And they're doing it on a pretty intensive level. So this is why you can imagine the banks and the central banks, they're not having it all their own way. And that's very, very telling. They are going to lose.
Yeah, it's exciting.
It is exciting because they're going to lose a lot of power. They won't. We'll have to see how it all ends up at the end, and no one knows for sure. But I can see some of them crashing and burning completely. I can see the whole central banking system around the world it's going to have to be retooled and rewired into something else. It's going to be fascinating to watch.
Yeah, I mean, they're going to have to cooperate. I heard that many of them will end up becoming custodians of crypto too. So, and if it's on the blockchain, it's going to be actually pretty safe, I assume.
Yeah. No, I think that I think it's going to be put it this way, it's not going to be perfect, and there's going to be definitely areas that we've got to watch. I wouldn't never go to sleep on blockchain and think, oh man, this is just going to be a carpet ride in, and we don't have any worries at all. I wouldn't be like that, but I think that that we are in a way better position. We're going to be in a far better position than what we are now. And it's going to be it's going to make us far more our voice is going to have a much bigger impact because we're going to be able to vote with our money on a currencies and assets that we choose, and that brings us a better seat at the table. And if we're doing that in a decentralized way, then people power truly will have a huge impact. It's because we're so fragmented and isolated that our voice tends to get lost in the wind. But if we're working in a unified way on a decentralized blockchain, that brings us all together and we can all be visible. And that's a huge amount of unity that's coming from the technology. So
Yeah, it's great. They can't censor us.
no, they can't. And because we've reached that tipping point, and because so many people want it, even some very wealthy people at the top want it for the similar reasons we want it. Man, there's only a very, very small group who are have evil intent, and they need us to do the dirty work. If we're no longer going to do it, then they're going to be exposed and isolated. So that's great for us.
Yeah, great. Thanks for that. Because I know a few months ago there was a big scare with Quant possibly going down, and the tides turned. Like I just received some information on that, I think yesterday. So I'll see if I can dig it up and I'll send it to you if you want. Like Quant is doing some amazing stuff now.
Oh, look, I've been a great believer in that project for a few years now. So yeah, I anything on Quant or the ISOs, I always keen to see that. So yeah, thanks. Be great.
Great. Thank you.
Yep. And thanks everyone else. We'll